Joining us with this week's Ag Week Market Extra is Randy Martinson. And Randy, big USDA report next week, and it is a big one, isn't it?
It is. I mean, this is going to give us, well, one, we just finished with the Pro Farmer Tour. That showed a little less than expected soybean or corn yields, decent soybeans. Now we're going to see if that gets verified in this. And we've had good weather. We've had, the crop has been advancing as far as crop condition ratings are concerned, but it's going to set the tone for whether or not we're going to hold these lows that we put in early July or not. And that's going to be important.
Some of the private guesses are starting to come out for soybeans above the 53 that we had for yield in the August report. Do you think that the crop is getting bigger?
I think the soybean crop is getting bigger, and I wouldn't be surprised to see that above the 53 number. I don't know. I know some are throwing it out at 53.8, and I don't know if we'll get that big, but the soybean crop does look good, especially in Illinois and in the Corn Belt area. So I do think we could see a pretty good number for that one, and that's going to spell some trouble.
That could put us close to almost 1 billion bushels for ending stocks?
Close to it. It'd be about close to a 900 million bushel ending stocks estimate. I mean, that is big for corn. It's going to be for soybeans, and that's going to create long-lasting issues for soybeans.
So you mentioned the July lows, the double bottom lows here. If we get above 53, those are not likely to hold?
I don't think they will hold. I look for this market to break through those at that point. And then we're going to see a 7 in front of the number, closer to probably 765, 785, I think, where we'll take the soybean market down to. And a lot is going to depend on how much, or where trade falls with China as well. And right now, it's looking like we're adding tariffs, not negotiating.
Corn, some of these early estimates are just a little bit, like you mentioned, below what we saw from USDA. I guess when we talk about this crop here, if we get something above a 178, where would the market go from there?
Oh, then we could be vulnerable to take out their July lows. I mean, we could see that market come under some pressure if we went above 178. I know that there's talk between 178 and 180, and then we're starting to get stocks back up close to 2 billion again in corn, and that's going to be somewhat negative. Demand is good, and now with Argentina putting their tax back on again, and it might bring a little extra demand back into the U.S. for corn, but in the big picture, we see a number like that, our stocks grow back up to 2 billion, we're going to see some pressure in corn.
Is 178 to 180 likely, though? The early yield results we're hearing are kind of mixed. They're not really confirming the big crop.
They're not, and I don't think it will. I don't think it'll come in this report. I think USDA will be a little more conservative. I wouldn't be surprised to see it close to 178, but I don't think we'll go above it.
So the other big issue that we're dealing with right now is these extremely and historically wide basis levels. What do producers do? Because they're not going to get any better going into harvest. And
especially the early part of harvest, that's not going to be very good. Once the harvest and everything gets tucked away, we could see basis improve. But, right now, I hate to say it, but this is a year where you're going to have to look at storing as much as possible, especially beans, because there is really no market. There's no Pacific Northwest bid. So soybeans are going to have to be put in the bin and held. It's anything that's not priced. Corn, to make room for the beans, I would look at moving some corn. I'd prefer if choice of sales would be wheat first, corn second, soybeans last.
Wheat market is pulled back here. We had been trading a lot of these global issues. Those are no longer a concern?
Well, Russia is no longer a concern. They came out and said that they're not putting an export tax on, so that took them out of the market as far as helping our market. But we still have trouble in Australia, and Argentina's putting the tax on. So there is still some issues in some areas. It's just not as big. Our production is going to come in to be a little bit bigger, I think, for our spring wheat. But then we're also looking at winter wheat acres, good rains down in the southern plains, and we're looking at more acres being planted.
Yeah, we are going to have a much better condition to put that crop in than we did a year ago in terms of winter wheat, aren't we?
Oh, tremendously better. I mean, they've gotten saturated soils down there, and the crop's going to get planted. It's going to have good growth rate to start with. We need warm temperatures, and that's forecast to happen. We're supposed to look at getting warming up here towards the end of September. So yeah, they're going to get a good start to a crop, and right now the estimates are about 10 to 15% increase in acreage.
So were farmers able to take advantage of the prices when we were close to our highs?
I'm hearing a lot did, and there was a pretty aggressive amount of selling down in the winter wheat regions, and I know up here in spring wheat country there was some selling that took place at those higher prices. But right now, I think we could see basis improve. Once we get into that November timeframe, we always see wheat basis improve. That's going to be the key to move the crop. And then if the futures market isn't there or cash isn't quite where you want to be at, it's going to be cheaper to re-own it with calls.
Let's move to cattle, and I feel like a broken record because we just keep talking about like this $6 range that we're stuck in.
Well, we are really stuck in that range. I mean, we just can't seem to break out of it. And right now, again, now the deal with Mexico is going to help, but we're seeing a lot of calves come in. The lower feed prices is helping the market a little bit, but we're getting back to the higher end of the range as far as the feeder cattle market's concerned. Producers with the spring calves, this is going to be an opportunity to maybe, lock some prices in on those calves.
So you say if we get above 155 on the feeders, that's where you're looking to make some sales then?
Yeah.
Okay.
Even if we can get to 155, I'd be locking in some sales on feeder cattle.
And the hog market, we did get a little bit of a push here on the idea that we're going to get this NAFTA deal signed with both Mexico and Canada. And in addition, we have these African swine fever cases that are erupting in China. So how far can we push the market on those news pieces?
If that disease keeps spreading like it is, I think we could push this market fairly well because it's going to cut back the demand, the supply quite rapidly in China. And I think that could bring them to town to want to try to negotiate some sort of a trade deal with us too, because they're going to need to bring pork in. So we have potential there, but if this disease gets under control and it gets handled, the consumer short term is going to shy away from pork too, and they're going to be winding up, I think, buying more beef, which will help support that market.
Yeah, the back months, the deferred month futures have really been pricing in a lot of this African swine fever, though, haven't they?
It has, and with as much as it's spreading, then there's been no control of it. It looks like it's going to get to become a lot worse before it gets better.
And that's also helping the cattle market to some degree?
I think it is helping the cattle market. It's helping with demand side, because right now, even though it can't be passed to humans and there's no concerns there, it's still the thought that the fever's there. If I'm not going to buy the product, I'm going to go to beef instead.
So a demand push. Thanks so much, Randy, for joining us. Randy Martinson with Martinson Ag, and that is this week's Ag Week Market Extra.